Hello, everyone. Welcome back to another episode of Keeping You in the Know, all things real estate. I'm your host, Carrie Ann with CMG Financial and my mortgage team. And I'm so excited to be here this week. We have a special guest. THDA is in the house. Ms. Toomey Parrott is with us. You know, I'm a big believer in the more that we know, the more that we can help. And first-time home buyers are a true passion of mine, helping them, guiding them. And THDA is a big partner in ours to be able to provide them with 100% financing. So today we're going to be talking all things THDA, everything that they offer. And I'm just so blessed to have Ms. Toomey with us today. Welcome.
Hey, hi everyone. Carrie Ann, thank you. Thank you so much for having me. We, of course, love you. We love the partnership. And we love that you love helping first-time homeowners. So amazing. So thank you for having me on.
Yes. Well, how long have you been working as an account manager with THDA?
It's been 5 years since March. So amazing, right? So before I was in banking and I wanted to make a difference. So it's I've loved it for the most part ever since I started.
Yeah.
Because of course, you know, home ownership is just one piece of the puzzle. And when I talk, I'm like, okay, net worth, net worth. This is how we can help you get there. So I love my job. I love being able to talk to loan officers and sharing this information, and also realtors. Definitely, I'm like, I want as many people to know about this program as possible. So.
Yes. Well, and it would be great for you to share a little bit more about the program. Many people think it's only one program, which technically Great Choice is what we call it, but there's different sections underneath it, whether we did an FHA loan or VA loan, that type of thing. But would you share more about the Great Choice program?
Yes. So what it looks like, you know, the down payment piece. So mainly that's why you know, as the loan officer, realtor, that's why you would come to THDA. Granted, we have over 20 different programs, you know, under the THDA umbrella. We are the state's housing finance agency, you know, but in the mortgage business, it's our down payments assistance. So that is a second mortgage. That's the Great Choice Plus, right? It's a bond program. We sell bonds to be able to fund this program. And then the first mortgage, a couple of options. Great Choice, and that is the a 30-year fix, right? That's for everyone that's eligible. And then for our veterans and folks in the military serving in the second tour, they get a 0.5% reduction in the rate. That's homeownership for the brave. So that's the first. You have a couple of options. Usually it's Great Choice for the first and Great Choice Plus for the second. And you know that we've had to update it recently. Prior to July the 1st was 5% of the sales price. The sales price is determined by which county the home is in. Starting July the 1st, we did have to tweak it a little, and I just want you to know why, right? Because we want to be able to continue this. We want to be able to keep doing it, helping people into homes. Last year, we had an awesome, amazing year, over 700 million, right? So think about it, you know, 5% of 700 million. So about 35 million is my guess. That money, you know, down payment assistance, it was a 30-year second, 0%, no payment. So it was just sitting out there because rates have been historically low. So folks weren't refinancing out as much out of THDA. And so our funds were kind of, you know, being depleted, and it was just sitting out there. So our financial folks are like, okay, we have to tweak it because we want to continue to do this. So that's why starting July the 1st, we did change it in that borrowers, first-time buyers, can get up to $7,500 in DPA. So homes under 150, the DPA, the down payment assistance, is $6,000. For homes 150 and over, down payment is $7,500. So that's the normal pairing. And so we provide the down payment piece, right? Once the loan closes, once you close the loan, THDA, we are the investor. We buy the loan from you. We service it. So we want to make sure that these loans are properly insured, guaranteed. So for the most part, the files that come to THDA, they're FHA underwritten because that's the best pairing with our down payment money. 98% of the files, FHA. You can also pair our down payment money with VA, USDA. Conventional, that's not the norm because we have to do those uninsured, which requires a 22% down payment. So that's not the norm, but usually FHA. Because if the borrower defaults, THDA, we want to be made whole against, we make sure that these files, these loans are properly underwritten, for the most part, FHA guidelines. So that's kind of the layers, what it looks like. Yes. So I guess one of the other things that came up because the compensation piece also changed. Because
Yes.
folks, they were like, wow, it used to be 5%. And Davidson and surrounding counties, the maximum purchase price was 375,000. So 5% of that is over 18,000. So that's what they were looking at, 18,000 versus 7,500. Huge difference, right? But
Right.
that wasn't who we were really helping. That's not, the type of borrowers we were seeing. I pulled up numbers for Middle Tennessee. The average home price, right, purchase price was 2,500. Or was it 200,000? I can't even talk today. I'm sorry. 205,000. So we're still helping low to moderate income earners in Tennessee. Oh, and the other piece of it, right? So 5%, and of course, it's a partnership. So the piece that's mortgage companies, how they make their money, they were able to charge up to 2% in origination. Up to 2%, depending on which company. Some charge 1%, some charge 2%. I believe the average was like 1.4% across the state.
Mm-hmm.
So instead of getting that money in origination from the borrower, from the buyer, this money will instead come from THDA. So that money that was going towards origination can now go towards other closing costs. So really it's 7,500 plus what was being charged in origination.
Huge.
So,
I mean, that allows, it used to be because,
yes.
of the arrangement we had with THDA, we had to charge, the points to make up the difference of the cost.
Definitely.
But now that has been removed, which actually is benefiting the buyer, the closing cost, and now a THDA loan all the way across the board has lessened. So that's a huge win for all of those first-time home buyers out there and the real estate agents working with them because they don't have to ask for as much from the seller. And with it being a seller's market, it's hard to ask the seller for as much in closing costs, now as well. Can you talk about the interest rates? Some people think that a THDA rate differs per lender like regular conforming interest rates. Share a little bit about how you guys create that, and does that shift often like, regular secondary market?
Yeah, so it is, if it's a THDA file, if it's a THDA borrower, it is THDA's rate, right? The current rate right now is 3.5% for everyone, for our veterans and folks serving their second tour. It's 0.5% less, it's 3%. We adjust these rates 2-3 times a year, maybe, as more funds are needed to finance this program. Our finance folks, they go to bond market, they sell bonds to access more funds for this program. So if you're going THDA, it is our rate, and it doesn't fluctuate very much at all. When it does change, we like to give about a week and a half notice, in case you're in process of coming to THDA. Yeah, so all lenders, THDA rates, it's 3.5 or 3% currently.
Now, the second mortgage now is required to have a monthly payment like you spoke about. It used to be silent. Now it's a monthly payment. And so that interest rate does mimic the first. Is that right?
It does. It does. So it does have a payment. So it's a 15-year amortizing payment, right, on 6,000 or 7,500, depending on the purchase price. So, and I still keep hearing grants. Is it a grant? We want that THDA grants money.
Right.
That was the case at one time, right? And then it was a 30-year silent mortgage. And right now it is a 15-year with payments. So just so you know, if a buyer should sell, refinance, or move out, that second is due back with the payoff of the first mortgage. So it's no surprise. This just remind, your buyers. Yes,
they do have the two payments. Now, it is truly two payments, right? They would write two separate checks every month?
Yes,
That's
two
good
separate
information.
checks. And it's, both coming to our servicing unit, volunteer mortgage loan servicing, or VMLS. Yes.
So a big part of the THDA loan, and to be approved with the THDA loan, the client has to go through an education course. And I think that's amazing. I think education is key. The more we know, the more confidence is built within, right? And so share a little bit about that class. It used to be that we would see each other face to face, there was teachers all around. Has that gone online now?
Yes, it's mostly online. I'm not even sure if any of our counseling partners are doing it in person. It's weird times right now, right? So I would think that most of it is online. That is an option that is available for everyone now. Before, I think you had to get special permission to do it. So it's $99 exactly per household. So if there are multiple borrowers, make sure that they're all taking that class and that they're all listed on that certificate. But you're definitely right. We believe home ownership is a big piece of the puzzle. It's one thing to get someone into a house, right? But for them to be successful, sustainable homeowners, that's a whole different thing. So the class, if it's online, is at their own pace. And at the end of it, they're more educated. They know the mortgage lingo, the home buying lingo. But a big piece of it's the budgeting piece. It's new expectations. It's different expectations than, let's say, if you're a renter, just
Sure.
be mindful, right? Timeline, because we want this process to be seamless with THDA, because we're transparent. We're like, okay, these are the boxes that a bar has fit into. These are the limits. These are the caps. These are our guidelines, so we don't want any hiccups. So be mindful if they're taking the class online, at the end, when they get done at their own pace, they are required to do a 1-hour consultation with the agency. This is with a live actual person. And as summers and family vacations and whatnot, sometimes these agencies, they're a 1 to 2 person shop. So they're in and they're out. So we suggest, get this class in as soon as possible. So that's not the piece that's causing the delay. We've had
Right.
that.
So important.
Yes.
We actually have 3 closings tomorrow with your agency, and so thankful for that and helping those first-time home buyers. Actually, this is going to record on Friday, so today is the day we're doing this. But it's interesting where even though we tell the consumer it's important you get the education done early, it seems to be that procrastination, and those were the couple things we were waiting on to be able to get that true approval. So agents out there, if you are working with a first-time home buyer, they can get the education done early because it's good. That certification is good for how long, to me?
12 months. 12
12
months. And right now, yes, right now, so we know that life is a little crazier, right?
Yeah.
So any of our certificates, good for 12 months normally, but right now, if those certificates, have expired in the last couple, 2, 3 months, we are extending that, because it's weird times. We're extending those expiration dates through the end of August.
Perfect. I mean, that's amazing that they can just get it done. Even when they're starting to talk about becoming a homeowner, this is the time to get that education, because that education actually answers so many of the questions that are given to the lender and the real estate agent. So that's an added
Yes.
value add there for sure. Love it.
Most definitely. And I did a couple of realtor trainings. I'm like, okay, do it so it's more seamless, because remember, you're working with first time homeowners. My brother at 48, he's like, I think I'm ready now. And he's like, I think I'm on one of those loans at 0%. I'm like, dude, I need for you to, take this class so that you can ask, some good questions. So, the expectations. So we totally highly recommend the home buyer education class.
So, there's rumor out there, working with a third party agency, such as THDA, could that cause delays? And I just want to give a shout out to you guys, because out of all the agencies that we work with, THDA has been on it. Your turn times are amazing right now, even with all the COVID craziness that we've got going on. So you've done a great job communicating and providing the manpower to be able to service all the loans that are coming at you on a regular basis. So thank you for that. So, working with a lender to get all the information to THDA, I think is the key, but you guys are doing a great job with getting it back to us and approved timely.
Hey, we appreciate that. We work on it. We realize, yes, in this business, time is of the essence, and so we ask for a complete clean file. And our underwriters are like, please, ask for in proper stacking order because some of these packages are over 100 pages. So to find and to go to where they need to, it's quicker, it's easier. Our current turn time is, within 48 hours. So thank you. We totally appreciate that.
It's not 9 and
You
10 days,
noticed.
so I can work
No,
with that.
no.
Work with that. It's great. That's really good. So I get often asked the question, can this house go THDA or can that zip code go THDA? So why don't you share a little bit to the audience about what houses can go THDA?
Yes. So we are the state's housing finance agency. We are available across the state, right? Middle, West, East Tennessee. We have purchase price limits. I'm in Nashville, so for Davidson County, surrounding counties, the maximum price that we allow is up to $375,000. So depending on the county, that's how much we can go up to. And yes, we do detached, semi-detached. We can do condos and row homes and townhouses,
And
as long as
manufactured homes too.
yes. Okay, let me do a little quick reminder. We love that y'all do manufactured homes. Not all our lenders do manufactured homes, but across the nation we're talking affordable housing.
Sure.
So why not have it in your mix? Why not let it be a part of your toolkit, right? Because manufactured homes are more affordable. It is our rates, right? We are the investor. We buy these from you. So there's not additional risk for our lenders. We can do the detitling, okay? So why not? A couple of things. So it does have to be a double wide, does have to be on permanent foundation, and it does have to have a livability time frame of at least 30 years. So that's what we require.
Good info to know on that. So let's talk about, yes, you can go up to 300,000, let's say, or the price point could go up there. However, THDA is looking at the total household income, right? I think that's a big part of the qualification is super important. And every county has a different income level, whether you're 2 family members or less, or 3+, is that it? I can't remember.
That's correct.
Category. Yeah.
Yes.
And they're looking for anybody 18 years or older. Is that true? Within the household?
Yes. We use tax exempt, tax-free bond money to fund, this program. So the IRS guideline is that everyone in the home who will live in the home that is 18 years and over, we have to include their income, mother-in-law, grandmother, sister, auntie, social security income. We have to include all of that. We want to be able to continue this program. So those are our guidelines. So a couple of things under that, both spouses, even if they're not both on the loan, we have to include both spouses' income. The separate absent spouse, we're using tax exempt bond money. We have to verify that spouse's income, even if they're not in the picture, right? And so a couple of situations that's, come our way is that, yeah, sure, I'll divorce him if that's what it takes to use this money. And, love is hard. We get it, right? So we're like, okay, if that's the route you want to go, awesome. Just be mindful that a THDA, we require the final divorce decree plus 30 days before we can issue a commitment. That 30 days is a Tennessee thing. It's not a, THDA thing. So again, timeline, no hiccups, no surprises. So they're getting a divorce, final divorce decree plus 30 days before we can issue a commitment. But yes, household income, if you have a dependent who's a student, he's over 18, if he's a student and we can get a copy of his school transcript, we can exclude that income. Child support, that's another one. If it is court ordered but not collected, we still have to include it. So those are some IRS guidelines.
Yeah, that's important. We've had a situation where, there's been a separation but no divorce, and they can't find the spouse. And now you're in a little bit of a pickle because you have to provide the income docs from the other spouse. So that does make it difficult. So asking all those questions on the upfront and understanding those guidelines is, so important for sure. So the income is important. And then how do you calculate the income? I think people ask, well, I'm with overtime and I may not get much overtime later this year type of thing. I would assume you
Yeah.
take the average, or excuse me, the
Yes.
year-to-date earnings and average it out, multiply it. Is that kind of what you're looking
Yes,
for to calculate?
yes, we do have to include overtime. We do have to include bonuses, you know. Yes, you can average it up to 2 years or the actual time, at that job. But yes, we do have to include those types of income.
So if it's $1 over the limit, can we work something out?
So there are some areas that are gray, right? Because we want as many people into homeownership as possible. We would
Sure.
love that. But again, going back to where we got the funding for this program, it's tax exempt bond money. We have IRS guidelines and we get audited, and we don't want to get pigged. We want to be able to keep doing this. Some things are black and white. So income is one of those things. And it is definitely one of those things that denies, the reason why it denies to most people is the income piece of it. So I suggest, just making sure, work with our underwriter, make sure that you're looking at it together and you understand whether they fit or they don't. There's no gray areas, unfortunately.
So rumor has it too, you're going to look at the bank statements and you're going to look at for any
Yes.
deposits in general, right? And so if you see
Yes.
consistent deposits, we do have to document where they're coming from. And then maybe that I have a side job picking up leads,
Yes.
or something.
Ubering.
Yeah.
Yes. Um, we trust, but we have to verify. Again, want to continue, to being able to offer this program. So bank statements, 2 months bank statements, our underwriters, they're double checking for any repetitive deposits. Is this additional income that they kind of forgot to tell us about? If
Mhm.
that is the case, repetitive deposits, explain to us what it is. Is it income? Is it not income? Did they sell something? The other thing is deposits 300 and over. Explain it to us. Paint a clear picture what it is. Is it additional income? Does it need to go into that income pot? Does the borrower qualify? Are they eligible to use this tax exempt fund money funded program?
Yeah, absolutely. This is good
Yeah,
information. We know that the credit score has to be at least a 640. Is that right?
that's correct. Yes. And again, sorry, no exceptions. 639 just doesn't cut it. So at least 640. Yes.
So first time home buyers, like you shared your brother, being of an older age, but again, first time home buyer. So they come in all
Yes.
forms, but what is the definition of a first time home buyer in the eyes of THDA?
So we're working with the HUD definition. Someone who has not owned and lived in as their primary residence in the past 3 years, right? So 3 years, they must have lived in it and it must, be their primary residence. So all of those things must be the case. So if a buyer owns a home like 7 years ago, because I was talking to a counseling, person, education counseling person, and they moved away to DC. They own a home. They kept the home here. They moved away to DC for a job, but then they came back. So we were just talking. And she's like, well, I own the home, so I can't use your program. But I'm like, but you haven't lived in there in the past 3 years. Working with our definition, you're still eligible for our program.
Wow.
Just be mindful in that math calculation. We do have to include 75% of gross rents of that unit that she owns, but she doesn't occupy towards household income.
Well, that's a little tip we didn't know. So that's exciting. We learned, that's
Right.
why I do this, we want
Yes.
to be keeping everybody in the know and we get to learn something new each day. So this is wonderful. Being if you are a first time home buyer out there, if you are an agent that loves working with first time home buyers, this is an amazing program. It allows for 100% financing. I did the calculation all the way up to around 215, I think, thousand get you at a true 100%. But then anything over, which you still can go over that price point, you still have to just bring a little bit of money to the table, but
Right.
not much, right? And so the other thing I love about this program, if you are somebody brand new to credit, so you're just starting out and you don't have any credit scores, this program allows you
Yes.
financing with 3 true alternate trade lines. That could be rental, car insurance, cell phone, or any utility bills. So that's a great option as well to me.
Yes. Yeah, yes, and I keep reminding folks, again, not to pick on millennials, but maybe they've seen the aftermath of the housing crisis, how it affected families and friends and whatnot. and they're like, never touching credit, it does bad things. So they've been paying, cash for things, and that's fine, that's awesome. um, but they can still go THDA. Like you said, we need 3 alternate trade lines. We want to make sure that they've paid their debt as agreed, right? So some trade lines, rents can be one. So just make sure that we can verify that if they've been paying cash, was it through Venmo, PayPal, we need 12 months of that. We, the investor, THTA, we want to make sure that they're a good risk. Other things, utility payments, cell phone bills, insurance bills, 12 months. Yeah, so 3 of those is what we require. The debt to income is a little bit lower, 36%. And then we need 2 months PITI, 2-month buffer.
Well, I think that's great because we want to set people up for success, right? And I think if we exhaust every
Definitely.
dollar everybody has, it's not really setting up anybody for success. Being a first-time home buyer, it's exciting to have ownership in something, but there
Yes.
comes with other expenses. You gotta maybe
It's
mow the
expensive.
lawn, and you gotta,
Yes.
finish it and all that other stuff. So that's
Well, that's the other piece of it. I was asked, if they have money, do they have to use their money? Can they still use THDA's money? And yes, we don't have, a limit. We don't have a cap on how much savings they have. We don't have a liquidity cap per se. As long as they, meet the low to moderate income, earners savings, we're not going to do this loan for millionaires. Sorry. So they can keep their money because buying a home is expensive. They have to furnish it, right? Right now, I would think they definitely wants a buffer in case their AC goes out. Again, we want them to be successful, sustainable homeowners. Use THDA's money. Our rate is reasonable. So yes, so no savings cap, and if it works, definitely use THDA.
Yes. Well, this has been so great. If you
Stop
are
it.
a first-time home buyer or somebody that is interested in learning more about home ownership and utilizing this 100% THDA loan, give us a call, reach out, ask questions, lots of questions. We want to make sure you guys feel really confident and comfortable with this whole process, and to know that you can take that education class and it's good for at least 12 months or longer is super important. So to me, for all those that don't know, you are a dog lover. I love all of your dog pictures on social media, and he or she was just singing your praises in the background.
Yes.
Share a little bit about your love for dogs, just because that tells a little bit more about how amazing you are.
So we foster dogs, right? We had 3 dogs, we lost 2, and we were really heartbroken. So we started fostering. We have a senior dog. He's like ancient. He's like a 20-year-old dachshund mix, and we wanted him to have company. So last year we fostered 20 dogs. We failed with 1. So I have a Chiweenie, and he is Mr. Attitude. He has an underbite, and he has so much personality. So I plaster him. Sorry, it's like food or dog. So right now, if anyone is looking for a dog, Moxie is a Maltipoo 2-year-old, perfect dog, cuddlebug, black, precious, perfect, except he doesn't like kids. And I'm like, I'm okay with that. So check him out. He's on Russell Rescue TN, and they're based out of Columbia, Tennessee.
Wonderful, wonderful. Well, thank you again for spending some time with us today, Tumi. Always a pleasure to get to see you and talk about this amazing first-time home buyer loan.
Thank you so much for having me.
You're
Thank you for
welcome.
doing
We'll see you all
THDA.
next week on Keeping You in the Know, all things real estate.